JP Morgan has upped their estimates around how much the UAW strikes will cost big automakers. Already, the strike is estimated to have cost GM and Ford more than $500 million each since the effort began. And with no clear path ahead to a compromise, the damage could only continue. JP Morgan estimates that GM could continue to lose $21 million, and that's per day, and $44 million a day for Ford here. However, the UAW expanded its strike to Ford's crucial Kentucky truck plant. Ford could now lose as much as $44 million per day there on the comparisons that you're seeing there on your screen. With more, let's bring in Greg Migliore, who is the Autoblog editor-in-chief. Greg, I mean, these are coming into massive sums at this point, and Ford had already come out last week and said, economically, we've already kind of hit their threshold or hit this limit. At least that's what they said. But now this is continuing to have a day-by-day impact on just production, on even hits to being able to monetize what they've already sought to bring to market in the future weeks and months here. So what type of broader impact, how much longer could we see this play out?
Hey, good morning, everybody. So the UAW expanding the strike to the Kentucky truck factory, you nailed it. That's the single most, I think, significant development of the strike so far. That factory accounts for $25 billion in annual revenue for Ford. That's larger than a lot of major companies when you think about that. Now, there's other factories that do build the F-Series, including the historic Rouge plant that's in Michigan. But this is a significant blow. The F-Series has been the best-selling vehicle in the United States since the late 1970s. So by targeting this factory, it really sort of ups the ante. It really puts more pressure on Ford. Now, on the other hand, General Motors agreeing to bring in some battery factories, allow them to be unionized as part of the master agreement, is perhaps the most significant milestone towards progress, I think. They also made some progress over the weekend with GM and Ford in the last couple of weeks agreeing to deals with the Canadian unions. So these things are possible as far as reaching an agreement. The last strike actually went about 40 days. That was a national strike against General Motors. And, it definitely, hurt that automaker for, several months, several quarters as far as profits. But right now it's tough to tell when it's going to end.
So, Greg, we still don't really know about the timeline of this. Obviously, millions at stake when we break it down by that per day impact. But when we talk about a new contract and what that could potentially mean here for these automakers, any sense just how big of a hit they could take if they do, in fact, go with what the unions want to say in terms of the inclusion of the upcoming battery plants and then also just the higher salaries and benefits?
Right now, it's a little hard, I think, to kind of cut through sort of the rhetoric on both sides as far as just how much of a financial impact this might have long term. We do know General Motors has signaled that they might take a $200 million hit just in third quarter earnings, which we're going to hear about later this month. So obviously, they're going to start to feel that impact immediately. Bigger picture, labor has always been a part of costs for any automaker. So whether they end up with like a 23% raise, which is what Ford most recently offered, or something closer to what the union has asked for, which was closer to 40, perhaps they meet in the middle and maybe they find a number that's tenable for both sides.
All right, Greg, we're also watching Tesla. It's a big story this week. We're going to get earnings results from the company after the bell on Wednesday. When it comes to the EV maker, lots of talk about the pressure that the price cuts are going to put on margins. And of course, this comes after their third quarter delivery numbers fell short of what the street was looking for. Give us the sense of what you're expecting to hear from Tesla and how that's going to shape maybe the price action that we see in the stock over the coming months.
It's really interesting. Tesla has cut prices multiple times this year, and several of their models are actually really good deals. It's actually a pretty good time to buy a Tesla if you could get your hands on one. They're below the average price of a new vehicle, which was $48,000 in October. Now, the other side of this for Tesla is lower prices cut into margins, which means third quarter earnings are probably going to be a little bit lighter, more pedestrian than we've seen in some recent years. The other hand, they've succeeded in propping up sales. Sales were up about 27% in the third quarter. So it's going to be a bit of a mixed bag, I think, here for Tesla. The competition has gotten tougher. That's a big takeaway I see. You guys ran a study that said 57% of U.S. car buyers are not interested in EVs. And that tells me you have that on one side, and then you have all these new EVs from Hyundai, Ford, Volkswagen, General Motors. The list goes on. There's, right now the pie hasn't gotten bigger. So I think that's put more pressure on Tesla, and it's a much more competitive landscape. As you take a longer look, though, Tesla stock is still up about $50 from last year, and it's more than doubled from that low point it kind of hit in January. So I think they're going to have an performance here with the third quarter earnings. The big thing is what are they going to say about the Cybertruck? That's what I'm really looking most forward to.
So that's exactly where I wanted to go, Greg. What could they say about the Cybertruck that would perhaps put investors' attention and even analysts' attention on that, traveling shape is what it is essentially. I mean, my goodness, we haven't actually seen it come to market. We don't have a time frame. We don't know pricing strategy really on that. And so what could they possibly indicate?
So they did kind of dole out a little bit of soup, if you will, in the last week. News has come out that they have an agreement with a Finnish manufacturer for the metal panels that will go on the truck, which is a very unusual approach to manufacturing. You don't see this type of material used very much. So they've sort of kind of, dribbled it out a little bit. I think anything else they can say about that will be eagerly awaited by investors. And, again, we don't know a ton about pricing, more details about the truck itself, where they're going to sell it, the sort of rollout. All of that stuff, I think, will be crucial for Tesla.
Certainly will. Look at those results after the bell on Wednesday. Greg Migliore, always great to have you. Thanks so much, Autoblog Editor-in-Chief. Thanks, Greg.
Thank you.